Ford Motor reporting record pre-tax profits for 2015, beating Wall Street estimates. I'm joined by CFO Bob Shanks in Dearborn, Michigan. Good to see you, Bob.
Thanks. It's great to be with you today.
Let's go around the globe a little bit. North America results very strong for you. Of course, that F-150 pickup truck, once again, the best-selling vehicle in the U.S. The auto industry as a whole set a record for sales in the U.S. in 2015. Can that be repeated in 2016?
Well, our call for 2016 is 17.5 million industry to 18.5. We came in at 17.8 last year. So we say, yes, it's possible. It could be around that level or even potentially a bit lower. But yeah, we think it's likely that we'll see a somewhat stronger industry. Not as much of an increase in 16 versus 15 that we saw in 15 versus 14, but yet very, very strong. So all this discussion around peak industries, we're at very, very high levels, and we see them as sort of a strong plateau, not falling.
All right, let's go outside the U.S. because you had a couple of significant milestones. Europe returning to profitability, Asia Pacific having its best outlook yet in terms of profit, the best performance. What are you expecting in China this year? Particularly, we know that you've targeted China for new Continental sales later this fall.
Yeah, we got very good results from China in 2015, and certainly that drove the record profitability of the region. As we move into 2016, we think the industry is likely to be higher in 16 than in 15. I think there'll be some bumpiness along the way, but we think that's a pretty good call at this point in time. We expect to get very strong profit contribution, and overall for the industry, we're calling for, or rather for our results in the region, we expect to do better in 16 than we did in 15. In terms of Lincoln, we passed the mark of 10,000 unit sales in 2015. That's the fastest that a new premium brand has ever achieved that level. And as you said, we've got two great new products coming in 16, the all-new Continental as well as the new MKZ. So with those added products, we're just looking for more good news from Lincoln, including growth from our network this year.
So Latin America then would be the only problem for this year regionally?
Yeah, Latin America is the only place that we lost money in 2015, and we are expecting to lose probably a bit more in 2016. And that's really because of extraordinary recessionary conditions in Brazil, probably the worst recession since at least 1900. And we think it's going to get even worse in 2016. And then in Argentina, the other big operation that we have down there, the new government is starting to restructure the economy. That's good, but it's going to hurt in the shorter term. So we see tougher conditions in South America. But having said that, our team has done a great job of responding where we can control things. So pricing was favorable last year. Our cost actually reduced despite the drag of very high inflation effects on our cost base. So we're doing everything we can, but right now the macro headwinds are just enormous.
So in terms of this year, you say that results will be pretty much on par with what we saw in 2015, give or take. Cash flow, though, will be lower. How does that impact operations?
Well, I think it's just a couple of unique factors. We had our best cash flow, at least since 2001 in 15, $7.3 billion. We think we're going to have very strong performance in 2016, but there's two differences. One, in 15, we benefited from the fact that we recovered from sort of the drawdown of our working capital at the end of 14 as we were in the launch mode for the F-150. We got that back in 15, so we won't repeat that in 16. And secondarily, there are some timing differences, accruals versus cash around things like marketing payments, compensation, and pensions, which we benefited from in 15 that we don't think we'll benefit from in 16. But you put all that together, it's still going to be very strong cash flow.
So also on the balance sheet here, on the debt side, about $120 billion in debt. How does rising rates impact you in terms of your own balance sheet?
Well, the $120 billion is Ford Credit debt, and that debt is separate from the automotive debt, which is $12.8 billion, which is what the credit rating agencies primarily look at, and that's the lowest level that it's been since, I think, 2000. But going back to Ford Credit, it's the leverage of Ford Credit's great, and also it's a self-liquidating balance sheet. So if there is a downturn, if volume falls, it actually self-liquidates. In terms of the consumers, we have seen spreads increase, but we've also not seen the base rates increase as fast as we had thought. So we don't see any particular meaningful near-term effects from all of that on consumers.
So Bob, let me ask you, do you think Wall Street doesn't understand your story based on what's happening with your stock price, or are investors worried that these booming car sales aren't going to last?
Well, I can only provide, my opinion. I think that you're seeing a lot of emotion, a lot of big, broad sentiment around big macro trends, some of which, are things to be concerned about, but some of them we just don't see. For example, this concept of peaking. We're at a very high level of industry sales in the U.S., but we see that continuing at that high level, which means good news for us. And in some of the other areas of concern, while there are certainly things that we're watching, volatility in China, as I mentioned to you earlier, we still see a very strong industry in China in 2016, which we think will benefit from. So I understand. All I can hope is that once everything calms down, they look at the value that we're creating around a growing business, profitability, expanding margins, an improved risk profile, and greater shareholder distributions, and we'll get the credit we deserve.
Ford CFO Bob Shanks, thanks so much.
Thank you.
I'm Rhonda Schaffler for TheStreet.